Hello traders, Damien here with a post-session review. I apologize that I'm getting this out to you late. I had a lot of things to take care of this afternoon, and also I had to work overtime today babysitting this second trade, which we will get into in a minute. First things first, I want to bring in the longer term chart. As you can see, the market is overextended. The market has produced a better than expected new structural high. Momentum overall is not that great, but the extension has been phenomenal. As we can see there, that every time the sellers have tried to come in the most recent swings, they've achieved less and less and less. All signs of a very, very strong market that is still willing and able to climb higher. Now, because the market is overextended like this, we cannot rule out the possibility of some of those longer term traders that are long realizing some of those profits. Also, the market finding areas and opportunities to get short up here, hoping for that more sustained, better correction to the downside. However, because of the absence of longer term structure to the left, nothing completing from a harmonic standpoint, and only having some ratio exhaustion and an absence of some clear uh, round number, I should say. I would say that 27,500 is a better number as a whole from a psychological point for the sellers to probably get more engaged. We don't know what that is. We don't know. We're not going to assume. We're just going to let the price action develop and let the price help us find an opportunity. On the long term right now, we're on the sidelines. We're going to remain on the sidelines for a little while, as there is no reason for me technically to get up here short. There is no case for me to build, and also price is not corrected to an area that's favorable for me to take on the risk and get long as well. So it may be a couple of days before we get into this trade. Ideally, we will see a proper correction to the 38%, and we'll see the market press up into new highs, or give us a complex correction to the downside and giving us a better risk reward ABCD completion, or some type of pattern that's bullish in nature for us to execute on. These are all things that could happen, but I am not forecasting anything right now, as there is nothing to forecast. Okay, so on the sidelines on the longer term, but we do understand that the market is completely overextended, or should be, and that there is an absence of structure to the left. That's probably what has kept the market so bullish, as people are not sure exactly, or are in fear about where to get short, because there's no footprint to the left. All right, but because of this, we could expect some complex price action to the downside. We could expect possibly some deeper corrections, but the overall sentiment of this market is we've had great extension. We have great movement to the upside. All these things will lead us to a basic shallow correction. Okay, there's nothing to do in the longer term right now. In the intraday, okay, we have this is the picture that we have to work with. Okay, when we looked, this is where the market opened up Sunday overnight. We saw that the market pressed down, and then we see a very smooth and efficient and strong move to the upside. Okay, we also now have to say, okay, well, what is our main swing? Where are the harmonics at play? And that's what I like to start out always with, as I been doing these, so you guys can see this. Now, superficially, or right off the bat, if you just at a glance, it may seem to you that this is the higher low and this is the new structure high. However, that's not the case. That's not the case, because this right here tested this area. Okay, had a retest, not have a new structure high, did not close higher. Therefore, this is just a complex correction into a new structure high. So our main swing was this, and this is the proper harmonic point to draw forward. Okay, because we had a proper correction from this. Yes, we had a proper correction here, but we did not achieve a new high. So price just tested this and came back down. Okay, so this is our main swing that we can project forward. Okay, and as we do that, we can see that the price came to the area and tried to correct, but it had a very shallow correction. So now we can ask ourselves, did it make a proper correction? Well, the only way to know is by drawing what? A Fibonacci retracement, and we can see the price just tagged the 38%. So this is a properly formatted main swing, and now we can take this and project it forward. Okay, the market did come to this area, tried to correct, but then had another little push and overextended here, and then we had a much deeper correction. Okay, so what does this mean? It means nothing more than we still have a main swing followed by another main swing, right? Followed by a higher low and a new structure. But we also have what? Another harmonic completion. Oh, sorry, another harmonic completion on a larger scale, right? So now this is kind of pointless to push forward, right? It doesn't make much of a sense to do that. So the one that's more applicable to us is this one, right? As we can see, the market did push up near these highs, did overextend a little, okay, and then the market had its proper correction. What does this tell us? Well, we had an increase in what? Momentum, right? We had cleaner price action to the upside, and we had huge projection, right? What does that mean? We have a very strong bullish market despite how overextended this market is, okay? And I like to use the proper terminology. I don't like to use overbought, because overbought may have you looking for unicorns and rainbows, and that this market is going to hit, the Great Wall of China, since I'm in the US. That's just not the case. That's unrealistic, and it wouldn't be the expectation. Okay, so let's start calling things corrections. Let's start thinking from the standpoint of overextended on either side, and that keeps things into more realistic context from a trading opportunity standpoint, and not being scared or talking yourself out of a trade because the market may be overbought. Because that's, if you're doing that, then you're no different than any oscillator that you could put on the bottom of your chart. All right, and we're empowered traders, and we like to use proper terminology. Okay, so where are we? Forget the rhetoric. Let's get back to the trading. So now we have a properly formatted main swing. We have a main swing here. We're looking for trades to possibly get long, right? But this is not when I'm at my computer here. Okay, this is 4 or 5 o'clock in the morning. So when I come to the market market opened up here, price came up here, came down. Okay, and at this point, I didn't get long here for a couple of reasons. Okay, and one is that we have an advanced pattern setting up here. Okay, and it's an ugly one because it's not textbook. Okay, it's not. I like more the textbook patterns. But if we draw a swing high to to a higher low here, we can see that the market came 18 and is 14. So it came 4 points short of qualifying the A to B leg of the Gartley pattern. Okay, but we like to think that the market is perfect or perfectly imperfect. So 4 points, you can consider it a reasonable margin of error. I think you should give yourself probably a 3% margin of error above or below to say, I can't always expect price to be absolutely perfect. Okay, but the market is working towards something harmonic, something from a pattern wise, and that is confirmed when price comes here, has complex price action, but comes up here to another qualifying point, is that price comes up, hits the 61.8 and stays within the 78.6, and then starts coming back down. Okay, as price starts to find support again in an area where the buyers have come in to find support, we see that happen as well, and then the sellers defended, and then price came back here near the open. So at this point, I saw the price is also working towards an ABC D pattern completion, which is right here, harmonically speaking, and that pattern completed down here, which also completed a pretty decent Gartley. Okay, and that's why on that rotation I took this long. For those of you that are not sure what a Gartley looks like, let me draw it for you. So it can look a little better. We'll go here to this point here. When you draw a pattern here, when you want to draw these patterns out and you have a low here and a low there and they are equal, okay, you want to pick the one that's furthest to the right. Okay, when you're looking between the two, and if this one was lower, then that would be the correct point. The one that achieves the deeper correction is the proper point. Okay, just a little FYI there. All right, so now we have a situation where we have a harmonic pattern that completes somewhere in and around this area. So it completed very perfectly. We had a very nice price action rotation here, and I got long. The stop went right below this area, which is about 40 something points. Not ideal from an intraday standpoint, but what? It is what it is. Unfortunately, the high and the low of the day are also my main swing. It is also a completion point to a pattern that I'm trading, okay? So yes, I could have done a bunch of things here. I could have traded the ABCD pattern, right? I could have, gone to a break even at the 38% and took profit at the 618. It never really got to the 618, okay, of the pattern. Let's get into the trade management now. So now, if we're trading this pattern or the ABCD, what we do is we draw a fib ratio from the A to D leg, right? A, B, C, D, or the A to D leg of the pattern, okay? And then we're talking about break-even point is here, profit target is up here of the pattern, okay? Now, I always tell you guys that structure is what? An area. And some of you asked the other day why I got to a break even early, that I should have had a winner, okay? And the answer to that question is that structure is a zone, not a price point. As we can see, the sellers consistently were willing and able to defend here and take price lower, okay? So that is the area that instead of getting to the break even here, I have to take into account that price reacted very sharply and very in a very favorable way on the selling side to that area. So I needed to protect there. Besides, the sellers have been being able to correct deeper here and been very efficient with their overall price movement. But I can also tell you that the sellers have also been wasting money, okay? How do I know this? Well, I know this because we had a very smooth and efficient correction here, right? And then I saw that the buyers were able to come in, and then the sellers came in to defend, right? But they didn't make the new low. Instead, the buyers were allowed to make a new high. What did that mean? The sellers had to start again, right? And the sellers came in, and the buyers come in, and the sellers come in, and the buyers come in. And every time the buyers come in, as you can see, they're taking more and more away from the overall price action here, right? Meaning that they're causing deeper corrections, smaller projections. It is causing a lot more candles for price to come down than it is to come up, okay? That is a sign, okay, that the buyers are moving price better, okay? We also see that momentum on the second overall leg of this pattern here is a lot less than the momentum that we had to drive the initial leg down. That's another sign of price action breakdown, okay? And another sign that the sellers are doing what? Wasting money. And at the end of the day, when you see how smooth and efficient price came up to how raggedy, choppy, and all these swings that are back and forth, back and forth, back and forth, only to cause a complex correction, tell you that overall the sellers are massively hemorrhaging, massively wasting a lot of money just trying to keep the buyers from entering the market again and taking price up, okay? That's going to eventually lead to an imbalance as one side loses money. Typically, the side that has been able to accumulate over the other is the one that's going to have the imbalance favoring them, okay? In this particular case, the expectations for a new structure high, okay? Because of that, because of the pattern, because of all of these dynamics and all of these, vicious attempts of the sellers to take price lower and make that new structure low, only producing struggling price action to the downside, will lead you that not only are the sellers losing money, but they're unable to accumulate, meaning that the buyers are what? Absorbing them slowly but surely. Why slowly? A couple of reasons. The market's overextended, right? There's no structure anywhere. So it's hard for both sides to say, I'm going to put a bunch of money here, right? So sometimes that tipping scale happens in a gradual way. And because of that, sometimes price tends to hang around in a particular area, like, well, what's going on here? Well, there's little footprint, there's little structure, the market's overextended on one side or the other, and all these things have to sort themselves out, okay? And it takes a lot of money to move a market unless it's a thin market. So because of these things, sometimes price action just gets stuck in the mud sometimes, okay? And these areas become extended areas of consolidation, extended areas of complex price action, which are annoying to trade, but you have to take a step back and see the big picture, okay? This opportunity offered great risk reward, okay, but I had to protect here. I had two things going against my new structure high and only one thing going for it. The one thing going for it that's my expectation, a new structural high. 100 people will have to agree with that. Things that are going against it, although my pattern is bullish, okay, I have a Gartley and an ABC depth pattern completion. These two have a break even and a profit target here will lead what? To lead me to price action further to the downside. The way I was going to play this was I wasn't going to get it to a break even here because I wasn't going to give my trade enough room. Plus, I'm trading the overall new structural high, which in theory should have me getting to a break even up here. But understanding that I do have some harmonic considerations against me, but I am also in line with what the market is working towards, I feel comfortable giving it some space, however, protecting at the 618. The 618 area also happened to have some pretty decent absorption to the downside and good price action reaction to that area, so I needed to protect slightly before that, result ending in a break-even trade. I had locked in 5 points, and that's what I took. Then there was another question in the thread about, do I re-enter when price takes me out at a break-even? And I said if I get another signal to get in, I do. Okay, I proved that to you guys here also. That although price came pretty much screaming down to take me out, I also got a rotation in a favorable area. I did get a 4-point less favorable fill, but nonetheless I had a signal still in the same area of interest, so I took it. I took that signal, and then price just took a dump again, and I was in this mud for a very long time. But again, nothing was really happening, and the reasons for me to be in the trade were all there. Nothing's happened other than price action did make a close below me, did move further to the downside, but nothing really happened, as this pattern and everything else that put me in this trade will invalidate itself if price got down here. That never happened, okay? But I was tired of being in here. I saw that the buyers were slowly, absorbing and accumulating over the area here, that eventually price will move up, that the sellers had wasted a humongous amount of money to the downside, and that was unsustainable, and that the buyers were willing in an area of overextended price action, that the buyers were still willing to spend money at these highs to keep price from falling and defending these areas. All these things told me that I was in the right side of the trade, that strength was on my side, but there was just a lack of overall commitment, and it was going to take time to create that imbalance. And sure enough, slowly after I decided to manage my trade aggressively and walk out with a few points, because it was 11, I was here till 142, when I actually was able to start getting aggressive here and employing my rules for a rescue mission, if you will, which you'll get more familiar with as time progresses. I got taken out, and then price eventually went in favor, confirming the analysis, confirming what I expected, and confirming overall everything that I've been speaking about here. Let's drill into this little area here real quick, since we are 18 minutes. I like to keep these short. As we can see here on the price action, we have a very nice and efficient move to the downside. That doesn't necessarily mean strength. We have to put it into context, and we'll talk more about context in the live stream. But as price came down here, as you can see that every time the sellers came in, what did the buyers do? Come in. They didn't allow the sellers to accumulate. And every time the sellers came in to defend their areas in very good fashion, they achieved less and less and less. And we can see down here there was a huge battle of money, that the buyers won, and they absorbed so much so that they didn't allow the sellers to overall absorb, and that caused a very quick spike of price action to the upside. My entry was at this level. My entry was here. So the way I manage my rescue missions, although this came nowhere close, but because of the time and I needed to leave, I decided screw it, I was going to treat it that way. This is my entry. Once price closed above my entry, I move my stop to the decision candle below that entry. So my initial was here, then my next one was here. So this is another decision candle, and then another decision candle came up, which caused me to move it there. I was going to leave it there and walk away from this because my trade was at a break-even +3 at that point. I didn't care anymore. I could leave and leave it open to see if price eventually got here, but the next candle just came in and took me out. But overall, if I would have had the time and the patience, well, I had the patience, I just didn't have the time, it would have been a very nice trade right now. But just to show you that, this system, reading the chart with accuracy and with empowerment just adds tremendous value to the overall decision making, how you can align yourself with the overall strength of the market, that ratios and harmonics lead you to not only great trading decisions, but also extreme accuracy within your trading. And um, and I hope that you guys are excited about these live little post not live, but post session reviews, and with the the posting of the trades on the thread. I'm very excited about Wednesday's live stream, and we're going to cover a lot of things. And as always, good luck and good trading. Thank you guys for the opportunity.